managed to get to the value reversed into a buy trade. And then we saw demand. Obviously, that means that the supply has gone back on the weak side. So supply gets squeezed out. And of course, then we see some supply coming in here, but that's S1, isn't it? That's S1. So obviously with S1, this is the easiest to squeeze. So when you see that S1 forming, you're always expecting S1 to squeeze. It's a given that S1 should squeeze. So when you see this S1 forming here, it's a given that it's going to squeeze at some stage. S1 squeezes, and we're making a fortune on it. So S1 is a squeeze. And this is how it's played out. This is how the trade has worked. And we've ended up with a spectacular outcome, running 41 handle bid and making some monies. So we told you in the classroom this morning in London, we said you should always be going after D1s or S1 trades. And the reason why is because if you are looking for D1s and S1s and you've got them, it means you've identified the weak-handed trader at a good price. The weak-handed trader at a good price. So this opens the door to running for stops. And this S1 seller is being squeezed. We don't know it's going to get squeezed until the demand is refreshed at this price, which it was. So you can see it rejects. If it wasn't, we wouldn't buy it. We wouldn't buy it until, of course, this price here, would we? So we wouldn't be involved in the trade unless we were down here at 98s, would we? And if we got down to 98s, the probability is it wouldn't just be an S1, it would be an S2 as well, which means that the squeeze is starting to come off the table altogether. So squeezing S1s, squeezing D1s is the way to make your money safely, cleanly, and plenty of trade opportunities as well, and always to be guaranteeing that you are going up against the weak-handed trader in every situation. This was an S1 seller. We went after them. We made the monies. So these weak sellers, these are the guys you want to go after. So we've been going after weak sellers in the last couple of hours, and we've been making a lot of cash by doing so. So well done if you've managed to take advantage of any of those. And obviously, takes us to the next key levels. We had a little chat about targets, about stops, and about areas where the stops. We were talking about a chap that's joined us from the Federal Reserve New York for the first time. The first time I've had somebody joining us from the actual Fed trading desk themselves. I've had Bank of England before, we've had Bundesbank before, but I've never had somebody from the Fed trading desk join us. So it was interesting to hear over the weekend some of the insights that he was able to provide us with, and some of the things that they were looking at. Some interesting facts that we'll share with you in the classroom as well, obviously, when it comes down to the workshop as well. So great trade, lovely outcome, and running through to stops. Somebody sold to the stops up here at 15s, and it's a good idea if they do that to take some monies as it breaks back below 15 here. So a good opportunity in a bag. Well, you can see for yourself, 3s to 15s. It's a $1,200 winning trade. So that's a perfectly perfect trade. Lovely, lovely.